This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September the 18th, 2015. Our time is 8:47 Mountain. We are back to taping our show on Fridays. Harold is back in Florida after a working vacation in Colorado. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. You can speak with him personally and privately at 1-800-432-1022. Our featured diamond of the week is a .44 carat oval cut, fancy, vivid, purplish pink argyle. We're going to talk about the argyle mine. Also, the fact that a big blue diamond is coming up for auction a little later in the show, in the second half of the show. But check out our featured diamond of the week at rarecoloreddiamonds.com. A .44 carat oval cut, fancy, vivid, purplish pink argyle. Just absolutely gorgeous. Don't forget, our radio show runs on 630 CHED in Edmonton, Sunday afternoon at 3. We have a podcast through iTunes. We're portable. We go anywhere you do on your portable device. Type in the World Financial Report on Radio. You'll find us there. And the shows are streaming live 24/7, and you can listen to them at your convenience on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. As expected, the big news of the week, the Fed kept interest rates at zero in the United States. Now, Janet Yellen did actually do a press conference after the Fed meeting, said that inflation was a concern. They also had a line within their statement saying that they were watching foreign markets. Obviously, they're keeping an eye on the BRIC countries as well as what's happening in the Far East. In the United States, the federal U.S. debt held by public now totals $107,000 per household, $13 trillion. There's a concern about a debt or financial crisis based on the amount of debt that's being held in the United States. And if you watched, of course, we had the Canadian debate Thursday night here in Canada out of Calgary, and I guess it was Wednesday in the United States on CNN. They had the Republican debate, and one of the things they talked about was the debt ceiling fight. The debt ceiling is stuck at about $18.5 trillion in the United States, and a lot of the Republican candidates were talking about shutting down the government because they want to fight over Planned Parenthood. So it will be an interesting time when they go to raise the debt ceiling, exactly what happens in the United States. That has to be done probably here in the next month or so. Deutsche Bank cutting 25% of their jobs this week. Hewlett-Packard to cut 30,000 jobs. It was 7 years ago this week the financial crisis started. Lehman Brothers went out of business. Also, Wall Street banks, they continue to settle lawsuits from the financial crisis. Wall Street Bank settled the CDS lawsuits $1.87 billion. And this week, Greek elections. And Lord knows what that will bring for the Greek people, but we do wish them well. They have been through a lot already. Harold, we have an outstanding featured diamond this week. It is absolutely gorgeous.
You bet we do, and we're going to talk about that soon. But, you know, right now the financial markets, because they did not raise interest rates, which obviously we've been predicting that for a long time, the interest rates have stayed between 0 and 0.25% since 2008. So really nothing is going to change. The fact that they didn't raise interest rates, and if they would have raised interest rates, it would have been by about 0.25%. So by them not doing that, you saw the reactions in the market that was supposed to happen. You saw gold go up, you saw the stock markets go down, but nothing has changed now. Absolutely nothing. So the markets will go back exactly the way that they were. You're going to see when the stock market opened this morning, we're taping the show on Friday, when the Dow opened, it was down almost 300 points. As we're taping the show now, it's down 185. When we started this morning, gold was up to 1143. The fact is that it's up $8 on the day, but it hasn't broken any major support or resistance levels. So basically, we saw gold come down to 1,080. We saw it rally to 1,160. Because there's heavy support in the market in and around that resistance, at that point, but nothing got breached. So as far as I'm concerned, the markets are going to remain and do what we suggested that they were going to do for the last several months. Gold is going to go back down because the U.S. dollar is going to strengthen. So right now, the U.S. dollar is actually up 14 points. So it's at 94.64, and the fact is that it's been trading in this range, but it's gotten to 98, 99 within that area. As soon as it gets to 100 and breaks above that, all it takes is one or two ticks above the par level, which is 100, you're going to see the market take off because there's buy orders in the U.S. dollar above the par level. It's a very, very important number, and when that happens, watch for the U.S. dollar to skyrocket and watch for the gold market to fall off again. So again, as far as I'm concerned, nothing has changed. The other thing is we know that the Dow is manipulated. So even with all this going on with China devaluing their currency, with China losing 30% of their stock market at that point, nothing much happened to the Dow. You saw it pull back. The high that it was at 18,500. We're sitting right now at 16,500. But if this was a true market, if it was a market that was trading on its own volition, we would have seen the Dow at about 9,000 or 10,000. But that's not going to happen because the powers that be are not going to let that happen at this point. We've got a much better chance of the Dow going to 20,000 at this point than we do of the Dow going to 10,000. So again, I anticipate that the U.S. dollar will continue its upward move as the strongest currency, and what's going to happen at that point is that gold is going to drop. It's going to test the 1080 level again, and that's going to happen in the very near future, and then we're going to see the market drop to about 1,000. It should hold in around the 1,000 to 950 level, but if the U.S. dollar gets above 108, 109, which I highly doubt it will because that's the highest level that we've ever seen the U.S. dollar at. What it will consequently do is push the Canadian dollar down to around the 60-cent level. So there's going to be a massive change between the Canadian and American dollars, and it would be a very smart move on your part to get some money into U.S.-based investments because this is going to last for quite a while. The Canadian dollar and the Canadian economy will continue to fall based on the fact that commodity prices are going lower. Oil prices have to go lower. In fact, oil in the $20 range, $20 to $25, is certainly not out of the cards. And if that does happen, that will be one of the major factors that will push the Canadian dollar down to around the 60-cent level, which we have seen before. This is nothing new. We have seen those type of prices before. And back in the 90s, when the U.S. dollar was sitting at 108, 109, don't forget, gold was all the way down to 250. This time we're going to see the U.S. dollar at 108, 109 again in that area, but gold will be at 4 times that price. That's why when gold does take off, when the time is right for that, and we will definitely let you know when we think that's going to happen, gold could go to $3,000, $4,000, $5,000. So at this particular point, we're smart just to sit back and let this market do its thing. Do not leverage gold. Do not finance gold. You only own gold outright. That's the most important thing. I've said that to you forever. The fact is that you don't trade in the gold market. You buy it as a hedge against all the bad things that are coming forward. We know that the U.S. has got trillions and trillions of dollars in debt. As Randy said at the beginning of the show, the fact is that they could close down the government, but that does absolutely no good. And the fact is that no matter how much the Republicans are, at odds with the Democrats, closing down the government is totally the wrong thing to do, and will definitely put the U.S. in a very tough situation. So I do not believe that's going to happen. Again, gold, I do not believe it's going to break out at this point. I believe it's going to fall back due to the strength of the U.S. dollar. Don't forget the silver market was down to 14.25, 14.30 last week, and it's moved up $1 on profit taking basically, or short covering basically, but silver is not going to drop as much as gold because silver has already dropped more than gold did. Don't forget, gold was at $1,900, and it came down to around $1,140 that it's at right now. So it didn't even drop 50%. Silver, on the other hand, was at $50, and it's down, let's say, at 14 and change, $15. It's dropped way more than gold has percentage-wise. So I don't think silver has much more left in the tank. I think that we could see silver, if I'm right, and gold does go down to 1,000 to 950. I think silver could go to 1150 to 1250 in that area. Platinum, we're not even concerned about at this point. Palladium's holding it at around 611. The oil market is down $1.26 today. It's at 45.64. But again, with a huge glut of oil on the market, and we know that very soon Iran is going to be shipping oil, even at a loss, they're going to flood the oil, the market with oil, as is other countries. Again, at this point, it's only about getting some money back into the coffers. It's not about making a profit. It's about staying in business at this point. So they're going to sell oil at whatever the price of oil is, even though the cost of production is much higher than that. So, we've seen a very volatile oil market, but there's no doubt in my mind that oil has got to go lower before it goes higher. And again, $25, $28, $29 is certainly not out of the cards. So, the way I see things, Randy, this was a volatile week, but in all reality, I know that there was plays that could be made by putting out put and call options at the same time to play this, meeting type of thing. But in all honesty, as far as the gold market goes, what did we see? We saw a $40 or $50 move. It's not enough to make any major money. So, again, I didn't do anything on that. I didn't trade that market at this point. Again, we did not believe that they were going to raise interest rates, so we just sat back and let the volatility do its thing, and we're just going to let the market come back. So there's no doubt that we're going to see gold come back past the 1080 level, and then again, I think it's going to come down to around 1,000 to 950. And then we could see a totally different gold market at that point. So, again, Randy, that's the way I see things in the market at this point. Nothing has changed. It was really just a waste of time.
This week, obviously, we have our featured diamond, as usual, rarecoloreddiamonds.com. Featured diamond of the week is a .44 carat oval cut, fancy, vivid, purplish pink argyle. We had word, and we have a story this week, that it has basically been disclosed that the mine will shut down in 2021. So here we are towards the end of 2015. That would leave us roughly 5 years, a little over 5 years left in the Argyle mine. They may have a year after that, Rio Tinto Argyle with diamonds that they have in reserve in their vaults. But we will have to wait and see how this plays out. But as things are being stated now, 2021. And we'll talk more about diamonds and Argyle a little later in the show. If you would like to get our free weekly newsletter, speak personally and privately with Harold. 1-800-432-1022, 1-800-432-1022, or connect with Harold at rarecoloreddiamonds.com. As he mentions on every show, generous offer to you if you'd like to speak with him about the financial markets, geopolitical events, where your money shifted, where you should have some money during the times that we're currently living in. Speak with Harold, and it is confidential. 1-800-432-1022. 1-800-432-1022. In our free weekly newsletter, a few quotes. Hence Ellis with Bonner and Partners said, a new global recession has begun. The collapse in commodity prices and the slump in the emerging market economies will inevitably lead to a sharp drop in global investment and a new surge in unemployment. Moreover, the recent stock market sell-off is making matters much worse by creating a negative wealth effect that will cause consumption to fail. Also, David Stockman, who was in the Reagan administration in the budget department, said this week that the place to go, in my view, is cash. Stay short and liquid because we're going into deflationary times. Deflationary collapse is what his concern is. We're going into a great reset in the financial markets where inflated asset values are going to be marked down tremendously, bond prices and stock prices. As a result, there will be great opportunities after the dislocation runs its course to buy things much cheaper than they are priced today. And he believes it will happen in the next 6 months. Richard Russell saying, my conclusion is the market is bearish and we're positioned as we should be out of common stocks and in silver and gold bullion. World is still waiting to see if the Fed has the courage to raise short rates. Obviously, they didn't. For some reason, the Fed believes the U.S. economy is stronger than it actually is, but I think the Fed senses that something is wrong. Therefore, I think the Fed will hold off on a rate hike, and he was right. If a rate hike is in the cards, it will not come until 2016 at the earliest. And if the Fed does hold off on a rate increase this year, people will sense their uncertainty about the economy. The Fed has painted itself into a box, whether it raises rates or not. The action from Wall Street will be negative. Michael Pinto saying, this is the sad truth. Either the massively overvalued stock market and our artificially inflated economy will continue the anticipated rollover that began in the middle of August, causing the Fed to stay on course, or the Fed will begin to slowly hike rates, causing the yield curve to quickly invert and the economy to completely fall apart. This is why investors should now be out of or short the stock market at least until the S&P trades near 1,600 or the next round of quantitative easing 3 is announced. That from Michael Pinto. What are your thoughts, Harold?
Well, again, at this particular point, it is so uncertain as to what is going to happen. I just don't see how they could ever have raised interest rates because the ramifications were going to be extreme. Obviously, they expected that the stock market was going to fall, and it did anyways. So that was confusing. And then on top of that, if they would have raised interest rates, it would have strengthened the U.S. dollar, which means that gold should have fallen. So the opposite happened on both of those situations. So it was just an action-reaction type of situation, but it didn't really make sense because the opposite should have happened. When they didn't raise interest rates, the stock market should have skyrocketed and gold should have plummeted. But the opposite happened. So, again, the markets don't make an awful lot of sense right now. And when these type of extreme situations come up, you're best off, unless you're just a out-and-out speculator, just to sit back and let the markets do its thing and then reanalyze it. But nothing has to be reanalyzed at this point because nothing changed in the market whatsoever. So, again, at this point here, I do not believe that gold over the short term is going to go up. I just don't see how in the world that's going to happen. So I'm sticking with my prediction, which I believe to be 100% true, which is the dollar will strengthen, meaning the U.S. dollar, and gold, silver, and oil will continue to fall until it reaches a point to where, again, the market is way oversold and something changes within the system. So what's going to have to change in order for gold to go higher. And by the way, even though we've always said that gold and the U.S. dollar are tied to each other, when the U.S. dollar is strong, gold's going to fall, there is an exception to that. And back in 1980, when the Fed was raising interest rates to fight inflation, don't forget that's when gold made its big rally and went to 850 as they were raising interest rates. That was the one time in history where that scenario of gold and the dollar didn't work. So I do believe that there's going to be a point within the foreseeable near future because I see so many similarities between 1980s, the early 1980s, when gold hit its high of $850. I see a lot of similarities to the way the markets were then and the way the markets are now. So again, I believe we have to see the market pull back further, and then I believe that the market is going to take off despite the fact that we're going to have a very strong U.S. dollar.
Speak with Harold personally, privately. Connect with him. He has an open invitation. If you're confused about these financial markets, not sure what to do, speak with him, 1-800-432-1022. The conversation is confidential. 1-800-432-1022 or go to rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Our featured diamond of the week is a .44 carat oval cut, fancy vivid, purplish pink argyle. It is an amazing diamond. You can see video of the diamond at rarecoloreddiamonds.com. rarecoloreddiamonds.com. One of the interesting stories of the week is from Adam Hamilton, and he wrote about silver. And as Harold has said, gold and silver, we're not ready to go into that market yet, but there will be a time. And I think Adam Hamilton sums it up quite well. Silver's vexing slumber. The bottom line is silver looks poised to awaken from its vexing slumber. The brutal bear market it has suffered due to the Fed's extreme market distortions is ending as policy normalization begins. Silver is set up for lots of buying as gold's recovery encourages traders to return. Not only are investors radically underinvested today, but speculators remain heavily short, which provides a guaranteed near-future buying. Like all markets, silver is forever cyclical. It's perpetually meandering from in favor to out of favor and back again. And after falling on balance for years as QE3 sucked capital and interest away from portfolio diversification with alternative investments, silver is way overdue to reverse into its next major bull market. The brave contrarians willing to buy silver and miners low before this becomes widely apparent stand to earn fortunes. And obviously, as Harold was saying, now is not the time yet. The time will be soon. And to listen to our radio show, speak with Harold personally and privately at 1-800-432-1022. We will let you know when the time is to get back in the gold and silver market. Ray Dalio, who is a very well-known hedge fund manager, founder of the $154 billion Bridgewater Associates, said he's worried about the next economic slowdown because monetary policy will be less effective than in the past. He says, I don't care whether they raise the interest rates 25 basis points, which they didn't. Dalio said Wednesday in an interview with Bloomberg Radio and Television, what scares me or what worries me is that the next downturn in the economy looks like with asset prices where they are and a lesser ability of central banks to ease monetary policy. He predicted returns across asset classes over the next decade will average only 3 or 4%. Narrower spreads will make it much harder for asset purchases to have a big effect on the market, he said. And obviously, Harold, we have about 30 seconds left. We believe diamonds. You will get a much greater return than 3 or 4% on diamonds.
We certainly do, Randy. It's one of the better investments and the smartest investments you can make at this point because it can be sold in other currencies and it doesn't lose its value like stocks, bonds, and other commodities. So we'll talk about that next. It's a phenomenal time to be in diamonds.
Speak with Harold about our featured diamond of the week. It's an absolutely gorgeous diamond, and if you've not seen it, go to rarecoloreddiamonds.com, featured diamond of the week, a 0.44 carat oval cut, fancy, vivid, purplish pink argyle. We'll talk about diamonds and a lot more, and you can connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. More coming up after the break as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September the 18th, 2015. It's a Friday. Definitely take a look at our featured diamond of the week. It's a 0.44 carat oval cut, fancy, vivid, purplish pink argyle. See video of this diamond at rarecoloreddiamonds.com. You can see a picture of the diamond in our free weekly newsletter. If you'd like to get your name on the list for our free weekly newsletter, have the same material in your possession and read it over that Harold and I are seeing on a weekly basis. You can go through it in 10 minutes or spend hours if you want. Speak with Harold about getting your name on the list at rarecoloreddiamonds.com or 1-800-432-1022. You can speak with him personally and privately about our featured diamond and also our free weekly newsletter. Don't forget, our radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. We have a podcast through iTunes. Type in the World Financial Report on Radio. You'll find us there, and we're portable. We go on any of your portable devices. We have the shows streaming live, archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. You will never miss our radio show. We're on all the different platforms. So you've heard about our featured diamond, and one of the things that, this was sent to me by Harold's son, Jonathan. It's interesting to note that there was a story about the traditional owners of the Argyle mine area in Western Australia, East Kimberley, celebrating a 10-year partnership with the mine owner Rio Tinto. And in that story, they said that they expect the mine to close in 2021. So here we are, sort of in the midway point of September of 2015. That would leave us a little over 5-6 years before that mine shuts down, but it will close before you know it. And Harold, that is the attraction to rare-colored diamonds. They're so rare, and then on top of it, you add the Argyles into the mix. 90 to 95% of the Argyle mine diamonds are pink diamonds. When the mine shuts down, they go away. And now we sort of have a definitive date, 2021.
Yes, and that's looks like it's engraved in stone. So you're talking, basically this year is pretty well over, so you're talking basically 5 years to see a phenomenon happen that will probably never ever happen again, because there's no mine in existence anywhere in the world that does what the Argyle mine does, which is produces 95% of one particular type of diamond. In this particular case, it's a pink diamond, which are amongst the rarest in the world, and the prices are really starting to reflect that. But once this mine closes down, which is only 5 years from now, there will not be any more pink diamonds. They produce 95% of them, and again, they are magnificent. They're the best investment you could make at this particular point. Because, again, on supply and demand for these diamonds are extremely high, and the supplies are at the lowest that they've ever been. On top of that, soon the mine is going to close, and we now have a definitive date that Rio Tinto says that they're going to close. At this point here, 5 years is a breeze with how fast time goes by at this particular stage of our life. So, this is an asset that never declines in value. So that's extremely important, because in today's investment world, you know, everything is so risky. You could wake up in the morning and find out that your stocks have plummeted, that commodities have plummeted, but that doesn't happen in diamonds. A diamond will never go to zero like a stock or a commodity can. So the fact is that a diamond like a pink diamond will never ever lose its value. And the closer we get to the mine closing down, these diamonds can increase by double, triple, quadruple what you paid for them. If you're looking at a retirement situation, you know, we put money, or I don't, but some people put money into their retirement savings plan and buy stocks with it. After 2008, when we saw General Motors and Chrysler and other stocks basically go to zero, that makes no sense to me. Why in the world would we work our entire life, try to one day make the right investments so we could retire a little bit comfortably, and then have all of our money and investment money sitting in such a risky market? It makes no sense. When you look at an investment, that what's going to give you the biggest return with the least amount of risk, you've got to look at pink diamonds, because again, the prices will never go down because there's so few of them. The demand is the highest that they've ever been, so that's a recipe for tremendous success. Then on top of that, there's different colors of Argyle pinks. The vivid pinks, which is the highest saturation, which, by the way, this week's featured diamond is an extremely rare, vivid pink diamond. Again, it's almost impossible to get a diamond like that. That diamond over the next 5 to 6 years could literally explode and increase by as much as 1,000%. We've seen that happen with blue diamonds, and we've seen that happen with other diamonds. So we do anticipate that the same thing will happen with pinks. This will be the only opportunity that we ever have in our lifetime to accomplish this, because there is no other mine in existence that produces 95% of any particular diamond. So again, a diamond as important as pinks, we're very, very fortunate to have an opportunity to put some money into an investment like an Argyle pink diamond. We'll never, ever get a chance to do this again. So again, investment-wise, an investment of $50,000 could turn into $200,000 or $300,000 over the next 6 to 10 years. So again, rather than put money in your retirement savings plan, which most people are losing on, take some of that money that's at risk, some of the money that's in your stock portfolio, which, by the way, if you're sitting in stocks right now, I could not think of a worse investment to be in, because there's no way in the world that the Canadian stock market, the U.S. stock market, Chinese stock market, or European markets are really reflecting how bad things are in their countries. And the fact is that the Dow in the United States should be down to 10,000 instead of 16.5 that it's at right now, because there's no way in the world that the U.S. economy is in strong shape. But it's in much better shape than Europe and China, and unfortunately Canada. I'm Canadian. There's no way in the world that I'm bad-mouthing Canada, but I am telling us the way that it is, because when our currency dropped by 30% over the last few years, that's detrimental to our survival. And all you need to do is go to another country like the United States and realize that if you want $1,000 American, it's going to cost you $1,300 Canadian in which to do so. And just a few years back, that was not the case. So what we're saying is to get money out of Canadian dollars at this point and get it into American-based assets. I'm not saying to trade American stocks or trade commodities in American money. I'm not saying to do that at all. What I am saying, though, is to get some money converted from Canadian, even though you're going to take a 30% haircut at this point, it's better than the 50% haircut that you're going to take in a few months. And the fact is by getting something into diamonds, which, let's look at this. 2 or 3 years ago, my Canadian clients that invested in diamonds have made 30% on the currency alone, and that was one of the major reasons why we recommended diamonds, was to get out of Canadian-based currency and get something into American-based currency, because, again, I've seen this happen before. Back in the 90s, the U.S. dollar broke par and went to 108, 109, and the Canadian dollar plummeted. The exact same thing is happening again, and if you don't learn from history, history tends to repeat itself. I've been through this. I've made a lot of money when these things have happened. And what I've been doing over the last couple of years is hedging the Canadian-American dollar. And again, we've made a lot of money from that. But what we're doing with that money, instead of putting it into our own pockets, we're turning it over to our clients. So basically, here's the way what we're offering. We want you in the diamond market, because that's where you should be. That's where most of the money is going to be made over the next 5 to 10 years. So basically, to get some money into an Argyle Pink or Yellow Flawless or a Green Diamond or a Blue, something like that, is going to make you not only a lot of money on the diamond, but it's going to make you a lot of money on the currency. So my recommendation is to get something into the rare diamond market at this point. You're going to make money on the currency, and you're going to make money on the diamond. And if you just sit there with stocks or bonds or keeping your money in Canadian dollars at this point, you're going to end up getting killed in the market. And we don't want to see that happen. This is a very conservative play that's going to make you an awful lot of money. The fact is that for retirement, you're much better off having your money in a rare colored diamond than you are to have your money in stocks. We've seen what happened with stocks in 2008, and there's a lot of problems out there. Not only is there currency devaluations going on all over the world, and countries going bankrupt, and cities in the United States going bankrupt, but on top of that, we have got currency wars going on, and you've got a lot of issues to deal with. Right now, the smartest thing to do is to eliminate the risk, to get out of the risky markets, and if you don't want to invest in any way, just sit in cash for right now, because at least you're going to preserve your equity. You're not going to lose it in the market. There's one other thing that I've talked about for a long, long time now, and I'm absolutely positive that this is going to hurt all of us or anybody that's in the wrong markets, the paper asset markets. And when I say us, I'm not in any paper assets at all. The only thing that I own that's paper is cash. Most of my assets are in physical gold, physical silver, and mostly in diamonds. Now, again, where I'm in that business, also, I'm a very conservative investor, and I do not put my hard-earned money into areas where I'm going to lose it. And the bottom line is that if you're sitting in stocks, you're going to lose your money. The biggest problem out there right now, the biggest concern we have is derivatives. Derivatives are the cancer that could absolutely kill your financial markets. We've seen a brief situation in 2008 when Lehman went under and what happened to the markets. If certain things were not done, we would not even be looking at markets the way that they were back in 2008. We'd be looking at devastation. We'd be looking at most people sitting with cash in their mattresses as opposed to anything in the bank. And the banks are not a good investment either. If you look at where the banks were before, stock prices were before 2008 and where they are right now, they're at a fraction of the price, means that the banks have not recovered in any way, shape, or form. So, with all this confusion, all this risk in the market, it's very good to simplify what you have. And at this particular point, to have anything sitting in the paper asset markets is a big, big mistake. You're going to lose your money if you're sitting in retirement savings plans that are in stocks and mutual funds. You're going to lose your money. There is no doubt about that. And if you're speculating or thinking that your money is safe by owning Apple or Google or any of those stocks, think again. Those stocks can come plummeting, especially when the derivatives market goes south. So, again, put some money into an asset that will not only preserve your equity for you, but make you a tremendous amount of money, and that's the rare colored diamond market. Most of my clients at this point are heavily invested in that market. Nobody's selling. Everybody's buying and holding because, again, this is not a short-term investment. You don't buy a diamond and sell it in 2, 3, 4, 5 years. You won't make the money. You buy it and hold it because you're going to make fortunes over the long term. I've spoken about this for a long time. My wife's girlfriend inherited a 5-carat pink diamond from her grandmother. Her grandmother bought it 50 years ago for $50,000. Today it's worth $5 million. In 2003, I bought a 2-carat vivid purplish pink argyle diamond when you could get a 2-carat vivid purplish pink. Back then, I paid $350,000. Today, that diamond's worth about $3 million. That's how much these diamonds go up in value. The longer you hold them, the more and more and more they go up in value. So my recommendation is to get out of the risky markets, get something into these argyle pinks. Now that Rio Tinto has come out and firmly given us a date of 2021, which again is 5 years from now, this is a phenomenal opportunity over a 5 or 6 year period to make a fortune in this market, and that's what I believe my clients are going to do.
Featured Diamond of the Week. What a great investment diamond to start a diamond portfolio or add to it. A 0.44 carat oval cut, fancy vivid purplish pink argyle. See video of this at rarecoloreddiamonds.com. Click on Featured Diamond of the Week. And it's interesting to note, as I touched on off the top of the show, 7 years ago, the U.S. economy went into recession. The U.S. housing market crashed, and the credit markets seized, bringing the banking industry to its knees. It was a global financial crisis. Businesses went down, and workers lost jobs, and Americans were losing hope, which only made things worse. For many, the low critical moment was the collapse of Lehman Brothers that went bankrupt on September 15th, 2008. So 2008. So here we are, roughly 7 years ago this week, Lehman Brothers went bankrupt. And the question is, has anything really changed on Wall Street or in the financial markets? And the question is, in my opinion, no. And that's why we need to have an insurance policy in your portfolio of hard assets, diamonds, gold, and silver. Featured Diamond of the Week, and Harold has a generous offer to you. Harold, one of the most knowledgeable financial experts on the planet, he's willing to speak with you at any time, personally and privately, about your current financial situation. You can call him 1-800-432-1022. The conversation is confidential, or connect with Harold at rarecoloreddiamonds.com. One of the big stories in the diamond world this week, a flawless blue diamond will become the world's most expensive gemstone when it fetches up to $55 million at auction. A flawless blue diamond is going up for auction. It's the Blue Moon diamond, named for its color and extreme rarity, is a 12.03 carat jewel, and they're thinking about 35 million pounds. That's 55 million US dollars. It has been assessed as eternally flawless, and gem experts say it's extraordinarily and impressive when it comes to clarity, combined with its vivid ocean blue color, making it one of the world's rarest stones. Sotheby's estimates the cushion cut will sell for $55 million at auction in November. The price would smash the current record of $46 million paid for a pink diamond, the 24.78 carat Graph Pink, in 2010. Now, natural color diamonds are known in the jewelry industry as fancy diamonds and have commanded some of the highest prices ever reached for loose gemstones. They are so rare that only 1 in every 10,000 diamonds has a fancy color, which includes red, orange, green, blue, and pink. The Blue Moon was discovered in January 2014 in the Cullinan mine in South Africa, which has produced some of the world's best-known diamonds. As a rough, uncut diamond of almost 30 carats, it was purchased for $25.6 million by diamond company Cora. The firm spent 6 months cutting and polishing the gem, which now measures 15.57 millimeters by 13.47 millimeters, so basically 0.61 inches by 0.53 inches. The intricate process was fraught with difficulty, as a single mistake could have shattered the gemstone, now at 12.03 carats. It is not only one of the largest diamonds ever cut, but it's said to be remarkably vivid in color and has been on display at the Natural History Museum in Los Angeles. David Bennett, chairman of Sotheby's International Jewelry Division, said, "The Blue Moon is a simple sensation, a stone of perfect color and purity. Blue, for me, is the most mysterious and magical of all the colors of diamonds, and the Blue Moon will now take its place among the world's most famous gems in the world. It's going to be sold at Magnificent Jewels and Noble Sale in Geneva on November the 11th. And Harold, I remember talking about this diamond in the past. It caused quite a stir when it was originally found and then purchased and cut. And now it's heading out to go on auction. And wouldn't that be something to see it go for $55 million?
You bet, and it probably will. But here's the thing that most people are missing. It's only 12 carats. It's over $4 million a carat. No diamond has ever been sold for that amount before. So back 10 years ago, you probably could have bought, if it became available, a 10-carat vivid blue flawless diamond for probably $1 million a carat. That was back 10 years ago. Now you're talking they're at over $4 to $5 million a carat. That's how amazing these assets are. A blue diamond of this caliber, we've seen bigger blue diamonds, but this is vivid in color, which is the best that you can possibly get. And on top of that, it's over 10 carats, and it's internally flawless. So it's absolutely amazing. I'm so happy to see diamonds selling for these type of prices, because again, this is something that 10 years ago we brought up to you. We wrote the article on rare colored diamonds, the best kept secret, and it was all about the Hope diamond and everything like that. So again, this is just so good for the diamond industry. And if you're getting the newsletter, you've got to look at this picture, because it will take your breath away, and you'll understand, again, why this diamond is worth close to $55 million, and it's only 12 carats. That's an absolute amazing situation for the diamond market. You know, I was also saying before that my Canadian clients are so important to me, and I want to see everybody do so well that we hedge the Canadian American dollar because we do a lot of business in Canada. So basically we knew that the Canadian dollar was going to fall substantially, but we still want our clients to profit. Now again, all of our clients that own diamonds in American dollars, which they are priced in American dollars, are doing tremendously well. They've made 30% on the currency, let alone what the diamond has gone up. At this point here, what I'm willing to do, because we have a large hedge on the Canadian American dollar, we're going to allow our Canadian clients only to buy diamonds, colored diamonds from us, mostly Argyle pinks, at Canadian dollars. So you're going to make 30% as soon as you buy the diamond. So that basically means that we hedge the Canadian American dollar because we had a lot of orders going to Canada. Rather than keep the money that we made on the hedge, we're going to turn that over to our clients. So, for example, if a diamond, let's say an Argyle pink, sells for $100,000 US, I'm going to allow you to buy that for $100,000 Canadian, where it would have been $130,000 Canadian. So you're saving $30,000. You'll be in profits on these diamonds as soon as you buy them, and that's what we want our clients to do, because we also own H. Siegel Fine Auctions, and when it comes to sell your diamond for you, that's where we look to profit because we're your partner. We make 10% of the profit and you make all the rest. So if you don't make any money on the diamond, we don't make any money on the diamond. We know the diamond business very well. Again, the only reason that we're making this type of offer is because we know what the diamond market is going to continue to do. Here's a 12-carat blue diamond that's going to sell for close to $5 million a carat. There's never, ever been a situation where that has ever happened before. So this is the way that things are going. And now you're going to see the same thing with Argyle pinks, because the pink diamond market is on fire, and we are going to allow you to buy Argyle pink diamonds from us in Canadian dollars, and you'll be up 30% as soon as you make that purchase. And the reason that we're doing that is because we need our Canadian clients to make a lot of money, and that's why we're giving this tremendous opportunity. So I hope you can take advantage of it. The market is on fire. You got a blue diamond that's going to sell for close to $5 million a carat. That has never, ever happened before. This is the greatest thing for the diamond market.
And if you're looking for a diamond to invest in, our featured diamond would be perfect. It's a 0.44 carat oval cut, fancy, vivid, purplish pink Argyle mine shutting down in 2021. We have the story in our free weekly newsletter. Get it from Harold, rarecoloreddiamonds.com. Go to the website and click on Featured Diamond of the Week. You can see our featured diamond there. One of the other stories that I thought was quite interesting, furs, diamonds, and a lipstick message on a mirror. Photographer granted unprecedented access to Elizabeth Taylor's Bel Air home as she laid on her deathbed, but she never got to meet the icon. And hers was one of the most photographed faces in history, an electrifying performer, colorful character, and glittering clothes horse. Elizabeth Taylor was the daring of every camera lens, and yet she is notably absent from the incisive portrait her last ever renowned documentary photographer Carol Opie obviously could have taken of her. But what Carol Opie did is went into her home between January and June 2011, just prior to Elizabeth Taylor dying, and took pictures of diamonds and jewels and furs and just all her amazing home. And we have that story in our free weekly newsletter. She's put it in a book. And the reason I put it in our free weekly newsletter is, Harold, you own a museum piece that is from Elizabeth Taylor.
Not only do I own a museum quality piece, I own her last 8 pieces of her estate, including her iconic daisy necklace. In fact, Elizabeth Taylor's pieces are so valuable and sell for 10 times what the estimated values are at auction. I can definitely show those to you on request, but we do have Elizabeth Taylor's collection, and it is beyond anything that you could imagine.
Yes, take a look at that info in our free weekly newsletter, the book about Liz Taylor, and speak with Harold about the Liz Taylor collection that is in his possession. Our featured diamond of the week, it's a 0.44 carat oval cut, fancy, vivid, purplish pink Argyle from rarecoloreddiamonds.com. take Harold up on his offer. Speak with him personally and privately at rarecoloreddiamonds.com or 1-800-432-1022. And Harold, it was an interesting week with about 15 seconds left. Your thoughts?
You bet. Very volatile, but again, nothing was accomplished. They did not raise interest rates. We knew that was going to happen. So at this point here, everything is status quo. Be short gold, long the U.S. dollar, and if you're in U.S.-based investments, I think you're going to make a lot of money over the next couple of years. Keep in touch with us. We'll let you know exactly what to invest in.
That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.